Higher tariffs, lower taxes, and an immigration crackdown. What's in store for the US economy under Trump? Welcome to Macro Matters. I'm Elena Casas. Donald Trump takes office on Monday, and his Treasury Secretary pick, Scott Bessent, underlined at his Senate hearing that rolling over tax cuts and using tariffs to try and extract concessions from foreign governments will feature heavily in their economic programme. Well, Lydia Boussour is an economist at EY. Lydia, hello. You said in a note that despite some noise in this week's data, inflation is no longer a concern. But what is that deregulation, tariffs and tax cuts could bring it back.
Our baseline is that we're going to see targeted tariffs on key trading partners, but we are expecting to see some inflationary impulse from that. And then you have the mix of stricter immigration and deregulation as well that can also put upward pressure on inflation. So these policy shifts are going to be important, and also very important to keep in mind that the current environment is different than where we were back during, in the first presidential term of Trump. We have an environment where there are cyclical and structural factors that are likely to put upward pressure on inflation in the coming years.
There's a lot to delve into there, but to start with, how much do you think tariff-induced higher prices might eat into American spending?
Yeah, so in terms of our estimate, we're expecting tariffs to essentially lift inflation by a few tenths at the end of 2025 and into 2026. So we now have headline inflation at the end of 2026 and at the end of 2025 at around 2.3%. So the idea is really that, in the coming months, we should continue to see core PCE inflation in particular coming down, but then renewed inflationary pressures in the second half of the year, and then that inflation bump. Now, I think it's really important to keep in mind that there is a broad range of scenarios when you think about tariffs. There are a lot of proposals out there. There is the risk of seeing blanket tariffs on all trading partners and 60% tariffs on China. That type of scenario will lead to an inflationary boost of a full percentage point by the end of the year. So very wide range of potential outcome depending on the magnitude of these tariffs that are going to be implemented.
What can the Federal Reserve then do about inflation that comes from these policy moves?
The Fed right now is really focused on the upside risk to inflation. So, in terms of what the Fed can do, they're going to be proceeding cautiously, and they're going to be slowing down the pace of their rate cuts. Given our outlook in terms of tariffs, we expect the Fed to implement, 3 rate cuts this year, but there is a broad range of outcome as well. We don't exclude, the potential for the Fed to actually hike interest rates this year if we were to see that renewed inflationary impulse.
Lydia, you mentioned the potential impact of mass deportations. What would that do to the US labour market?
Yeah, so immigration is a key theme for the labour market, and it's been an important theme in that job market recovery that we've seen. We've seen a significant rebound in the labor market, and the labor supply has come back online. And that has been partly driven by the strong rebound in immigration that we've seen over the past few years. So, looking at the potential for stricter immigration, that means a restrained labor supply and the potential for renewed wage pressures. If we look at wage dynamics today, we are looking at some wage moderation, and there is the potential for seeing more moderation going forward. If you look at leading indicators of wage pressures, like the quits rate, it's at a decade low. So really, in terms of stricter immigration, it's really this potential to restrain the labor supply and lead to renewed inflation pressures.
Lydia, the dollar would presumably move higher on this basket of policies. Will it increase the imbalance between the US and the rest of the world that we're seeing already?
Yeah, so there is some potential with higher tariffs of a strong dollar, and we've seen, some volatility over the past few weeks, and the dollar strengthening on the potential for higher tariffs and higher U.S. rates as well. So that's going to be certainly an important risk to monitor, especially as emerging markets are looking at central banks in emerging markets are looking at controlling inflation, and they're going to be contending with not only these potential shifts and volatility in terms of commodity prices, in terms of trade disruptions, but also in terms of the volatility we could see also in FX market.
Lydia Boussour of EY, thanks so much. And that's Macro Matters. You can watch more videos on Reuters.com.